SoFi stock has been making some major moves, and today we're diving into what's driving this momentum. From recent market shifts to institutional activity, we'll break down the factors influencing SoFi's performance and what investors should be keeping an eye on. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting off, SoFi saw an impressive jump of 6.6%, hitting a high of 13.76 and a low of 13.14. The trading volume was strong, with 58.6 million shares exchanged, significantly higher than the average of 48.5 million. Several key events contributed to this surge, one of which was the recent news regarding tariffs. Initially, a flat-rate tariff implementation was expected on April 2nd, which created concerns about inflation and economic slowdown. However, the White House announced a shift towards a more targeted approach, alleviating market fears. This shift reassured investors, leading to a broader market rally, which SoFi benefited from. Many institutional investors had been factoring in worst-case scenarios due to potential tariff impacts. Their cautious stance had kept market sentiment bearish. However, with the latest policy adjustments, these institutions have started to reposition themselves, triggering a strong upside for multiple stocks, including SoFi. From a technical perspective, SoFi looks strong, despite the absence of company-specific news. The stock's movement is largely driven by macroeconomic factors and investor sentiment. Another interesting development emerged from an email SoFi sent out to users, which has sparked curiosity among investors. While I personally can't open a SoFi account, I did receive this email, and from what I've seen, several others did as well. The email referenced federal loan-related matters and appeared to be legitimate, with a verifiable contact number. This seems to have been an unintended error on SoFi's part, but as of now, there has been no official clarification from the company. Looking ahead, competition in the digital banking space is expected to intensify. Traditional banks, including Bank of America, are restructuring their operations and moving towards digital solutions. With many brick-and-mortar branches expected to close in the latter half of 2025, the digital banking sector, where SoFi operates, will see increased rivalry. SoFi will need to adopt a more aggressive approach to maintain its market position, similar to the strategies employed by Robinhood in the past. Short interest in SoFi remains significant, with 617,000 shares shorted today, bringing the total shorted shares to approximately 131.54 million, representing 12.2% of the free float. This marks the third consecutive day where the cost to borrow has normalized, suggesting that brokers are reassessing the feasibility of paying high borrowing fees for short positions. Turning to options activity, today saw a total of 15 million in call options and 4.68 million in put options, with 46% of options trades being bearish. Despite this, call option volume was notable, with premiums reaching 19.7 million compared to 12.8 million the previous day. The current market consensus appears to anticipate SoFi reaching a price range between $14.50 and $15, while bearish investors are expecting a drop below $12.50. Institutional activity is also noteworthy, with multiple high-value transactions taking place in the secondary market, particularly those exceeding $100,000. With this being the final full trading week of Q1, institutional investors are actively rebalancing their portfolios, contributing to heightened activity in SoFi. Some of the notable trades include transactions worth 2.3 million, 6.3 million, and 20 million, indicating strong interest from big players. The dark pool has also seen significant action, with notable transactions including trades of 1.1 million, 5.7 million, and 2.12 million shares. The connection between dark pool activity and short selling remains a key consideration, as large investors often use this avenue to accumulate positions discreetly. From a technical perspective, SoFi's ability to close at 13.72 above the S1 support level is a positive sign. Last Friday, it cleared the S2 level, and today's movement above S1 suggests strong momentum. Key levels to watch moving forward include support at 13.59 and resistance at 15.00, followed by a further resistance point at 16.41. If SoFi maintains its current trajectory, it could push towards these resistance levels in the coming sessions. Macroeconomic factors will play a crucial role in determining SoFi's next moves. Upcoming data releases, including GDP and PCE figures later this week, could influence market sentiment. If these reports come in strong, SoFi's rally may continue. Otherwise, some pullback could occur. Looking at the chart, today's price action was supported by the ALMA moving average, currently sitting at 1273. The next major resistance levels are clustered around 1455 and 1457, making this an important area to monitor. If SoFi consolidates around this range, a breakout could be imminent, driving prices higher. Momentum remains strong, and the overall market sentiment is bullish. Investors should keep an eye on key data points and institutional activity to gauge the stock's next direction. SoFi has the potential for further gains in the coming weeks, and it will be interesting to see how the stock performs as we move into Q2. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.